Welcome to Talk Tickers. Today we are digging into Surf Air Mobility's Q4 2025 earnings call. So, the big question is their ambitious tech platform story finally ready for takeoff, or is it still just kind of stuck on the financial tarmac? Let's find out.
Okay, so here's what we've got on the docket. We'll kick things off with a quick results snapshot, then get into their big pivot to growth. After that, we'll look at guidance, the investor context, and then wrap it all up with our take on what's next.
All right, first up, the results snapshot. It was a really mixed quarter. Let's dig in.
So revenue came in at $26.4 million, which was pretty much in line with what everyone was expecting. No surprises there. But the trouble spot, that was their GAAP EPS, their official earnings per share, which missed what the analysts were forecasting. And yeah, their adjusted EBITDA loss was within their guidance, but let's be real. A loss of almost $8 million in one quarter, that is still a significant amount of cash to be burning through.
But hey, it wasn't all doom and gloom. Operationally, they actually had a huge win. Check this out. Their controllable completion factor, which, is really just a fancy way of saying the flights they didn't mess up for reasons they could control, hit an incredible 98%. I mean, that is a massive jump from 89% just a year ago. It really shows they're starting to nail the fundamentals of, actually running an airline.
Okay, let's move on to the pivot to growth. Now, this is the story management really wants you to hear.
Yeah, this quote from the CEO, Deanna White, was basically the theme of the entire call. Today, we are no longer resetting, we are pivoting to growth. The message couldn't be clearer. 2025 was all about fixing what was broken. Now they're saying they're ready to build.
So how are they going to do it? Well, it all comes down to these three pillars. First, just keep getting better at the core airline business. Second, and this is the big one, the potential game changer, start making money off their software, SurfOS. And third, go all in on electrifying their fleet with a really important new partner.
And you can see here how all the pieces are supposed to fit together. You've got the beta partnership for the actual electric planes, up to 100 of them. Then you have SurfOS, which is powered by Palantir Tech, acting as the brains of the whole operation. And where does this all come together? Well, they're putting over $22 million into Hawaii to make it the first real-world test for this whole ecosystem.
Okay, so that's the grand vision. But what about the numbers? Let's talk guidance and the future, which is definitely a tale of two halves. For the full year, they're guiding for somewhere between $128 and $138 million in revenue. Now, if they hit that, we're talking about 20 to 30% year-over-year growth. That's a serious acceleration from what we saw in 2025.
But, and this is a huge but, all of that growth is loaded into the back half of the year. Why? Because they're banking on SurfOS and their on-demand business to really kick in later. I mean, look at Q1 guidance. It's soft. They're telling us not to expect any revenue from SurfOS in Q1. So they're basically asking investors to just trust them, to believe the switch will get flipped later on.
And that really brings us to the core tension here for investors. Let's get into it.
This slide nails the disconnect perfectly. It's like management and the market are watching two different movies. Management is all about the future. Look at SurfOS. Look at our beta partnership. Our debt is lower. But the market? The market is looking at right now, and it sees cash burn, it sees GAAP losses, and it sees that soft Q1 guidance.
And you really have to see this in the context of the stock price. I mean, down almost 50% year to date while the rest of the market and even other airlines are up. Ouch. What that means is management has completely lost the benefit of the doubt. They're talking to a very skeptical audience now. They can't just talk about the pivot anymore. They have to actually deliver.
All right, so let's put it all together. Here's our take on the next call.
So what is the call for next quarter? What are we expecting to see?
Okay, here's our prediction. The Q1 results themselves are probably going to be a snoozer. We think they'll hit the low end of their own soft guidance, and nobody will be surprised. The numbers aren't what matters. All eyes, and I mean all eyes, are going to be on any updates around SurfOS. Any hint of early traction, any customer signups, that's the whole story.
So for the stock price? Yeah, expect more of the same. A whole lot of volatility. This stock is going to be a total battleground. You've got the growth story bulls fighting the cash burn bears. And that tug of war is going to continue until the company can finally put some real, tangible SurfOS revenue on the board. They have to show the money.
Which brings us to our rating. We're calling this one a market perform. Look, the long-term vision is compelling, it's ambitious, and it could be huge. But you just can't ignore the very real, very near-term risks around execution and their financials. It's a classic case of great idea, but prove it.
And as always, this is not financial advice.